Thursday, February 3rd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at commodities. And yes, I still believe we are in a bull market super cycle. We're just in the beginning, I think, in the first two or three innings, so to speak. I think we could have years ahead of a bull market in commodities. But one thing that I think indicates right now that the monetary system is in trouble is the volatility in commodities markets. And why is that? Well, we have to go back to 1944 when the current system was reorganized or organized, the Bretton Woods system. Of course, they started meeting before 1944. It was being done behind the scenes. But yeah, Bretton Woods, basically, by that time, the Allies knew that they were going to win, and they had to set up a new monetary system. The world was in shambles. The United States, though, as a country and an economy, was intact. And the United States also had, I think, 2/3 of the world's gold reserves. It was in a very good position. So the whole system was designed upon with the dollar at the center of the system. The dollar was king. And it was pegged, of course, to gold at $35 per troy ounce. And it was fixed. And all the other major currencies, they were fixed to the dollar. There was no volatile FX market like we have today, and we've had since 1973. And why 1973? Well, because in 1971, when Nixon really wrecked the monetary system, took the premier currency off gold, they did try to keep the currencies fixed to each other, but without something real fixing the top dog. You couldn't have fixed rates because everyone was cheating. Everyone was creating currency out of thin air without the backing of real money. And they tried for a couple of years, and in 73, the whole system went floating. The floating rate system, which is basically an abomination, I would say. It's like having the pound, the kilo, the mile, the kilometer, the inch, the centimeter, all changing every day, and having a market run by the bankers setting the price of all those things. That was what happened. And it's not me just saying that. It was people like John Exter, who used to work for the Fed, who set up central banks around the world after World War II. He talked about it being an I owe you nothing system, that it was rudderless. So prior to 1971, 73, commodity prices, yes, they did fluctuate, but they were a lot more stable than they have been in the last 50 years or so. And as the dollar has been king, so to speak, or the major reserve currency, all the trading in commodities historically since 1944 has been done in dollars, and that's why countries around the world need to have dollars, and that's why they try to export as much as possible, and that's why the United States has become such a big indebted nation in terms of not just the national debt, but also external debt. The United States has been running a lot of deficits, trade deficits, current account deficits, because the whole world is trying to get dollars so they can get commodities. That's changing, of course. I'm aware of that. We're seeing countries like Russia and China and others making bilateral deals to deal with their own currencies, and sometimes even barter, like we've seen. I think it's Iran, and it could be Burma or Myanmar actually doing barter deals because Iran owes, or Myanmar owes money to Iran, and they can't pay, so they're sending them tea to pay off their debt in dollars. Well, they can pay, but Iran can't deal in dollars. So there are those things developing. And I've spoken about this many times as well, how the petrodollar is the power of the dollar system. The Bretton Woods system is waning. And so the thing about commodities that a lot of people sometimes don't get is that, yes, we do get the odd bull market, let's say, in a certain commodity, or we get a drought somewhere in Brazil, for example, and the price of coffee goes up, and that's normal, and so on and so forth. We get the oil embargo in the 70s, the price of oil goes up, even though that affected all the other commodities. But now what we're getting is all commodities going up, and we're also getting a lot of volatility. And I think the poster child of this volatility in commodities is lumber. So, and yeah, we have to go back to 2020, beginning of 2020. You can see how lumber, was trading sideways for over a year. And then we had the big liquidity crunch, the collapse of March 2020. Lumber dropped sharply as well. But ever since then, if you look at the chart of lumber, it's quite amazing. We had that huge move up in May of last year, and then we had a massive move lower, and then it held near the lows from 2020 or from October 2020. It held that level in August of last year, and then it almost went back up, well, very near, I would say more than a 50% retracement of the move, the big move up. And now we're seeing it correct back down. Even yesterday, we had a huge move higher from below 90 here to over 100 on this chart. So what does that mean, the volatility? Well, yes, it has to do a little bit with the supply chains and all the disruptions to the economy, but I think it has a lot to do with the currency, with the fact that people are losing faith and confidence in the dollar, in the Federal Reserve. We all know, at least those of you who've been watching me, that I've been saying that they're way behind the curve. I've been saying that they can't raise rates because the debt is so high, their balance sheet is so leveraged, the money supply has gone up so much, the government, consumer, corporates, they're all so indebted that raising rates, unwinding the balance sheet, that's going to create a lot of problems. So I think the volatility in commodities is saying that the faith in the denominator of commodities, the dollar, is waning. Have you ever seen, if you look at emerging market currencies like the Turkish lira or the Lebanese lira or other currencies that have had a tough time, when you look at the price of commodities in their currencies, it's a big mess. It's like all over the place. And unfortunately, I think we're starting to see that with the price of commodities in the major currency, in the US dollar. And that's going to apply to all other fiat currencies because they're all a derivative of the fiat dollar. The other one, of course, is crude oil. And that was a crazy ride back in 2020 when crude, well, it was WTI crude, went negative. not Brent. It went negative, like negative $37.50, because there's no way to store it in Cushing, Oklahoma. So it costs more to hold that oil and wait for storage space. So people are trying to get rid of it because they're going to lose more than $37 a barrel to keep storing it somewhere else. And that, of course, was an anomaly, but still, as you can see, we've gone from negative to almost 100, and along the way, we're getting some really choppy price moves as well. And that's very significant in my opinion. I think gold and silver actually, with their move back in first half of 2020, I think silver went from below 12 to 30 in the matter of weeks or a few months. Gold went from 1450 to 2070. That was forecasting this massive move higher in commodities. If you remember well, gold was still was doing quite well back in the run up to the correction it had in 2020 from 1750 to 1450. It had gone from just above 1,000 in the end of 2015 to those levels. And commodities in the low in March, they're still at their levels from 2015. So they've caught up. Gold and silver have given the signal, yes, and they're resting right now. But believe me, I think they'll start moving up soon. Yeah, they're telling us that things are going to get pretty wild. And what does volatility in commodities do to the real world, in my opinion? Well, it makes pricing goods and services very hard for producers, for manufacturers, for shipping, for end use, for consumers, and it will make the rising prices even worse, because the volatility makes it hard for people to plan, to do things, and businesses are going to have a tough time. They're going to maybe wait, for example, when lumber prices go back up, to wait for it to come down, and if it doesn't come down, they'll rush to buy it, and vice versa. It's going to be very confusing, and I think that's a huge symptom of the problems with the monetary system. So with that, we're going to look at the markets, see where they are this morning here in London. It's 10 to 9 a.m. London time. Before we run through the prices, just wanted to say Metaverse, which is the name for Facebook now, came out with their results yesterday. They were not good. I think it's Metaverse is down like 22% in the aftermarket, or Facebook. Today we have the Bank of England. They're going to raise rates. That's almost like a done deal, from 1/4% to 0.5%. Sounds a lot, but we've got prices rising at 5 to 7, maybe even 10%. So they're way behind the curve, of course. The ECB is not expected to do anything today. They're coming out as well. I think they've got a couple of rates they set. One of them is negative. The other one is a 0. They're not expected to change anything. So again, none of these major central bankers or central banks can really rein in the inflation because they've created the inflation. They've made the drug addict so dependent on it that if they pull the punch bowl away, or the drug, the whole economy will implode. And I think politicians and bankers, they prefer inflation rather than a very sharp deflation. So with that, let's see where things are. We've got spot gold at 1805. That's down just over $1. Range has been 1802.50 to 1809.30. Silver is down about 13 cents or 2/3%. We're trading right around 22.50. Low has been 48, the high 68. Dow futures down 36 points. The NASDAQ 100 future is down almost 2%. I guess that's on the back of Metaverse. It's down 280 points. So the day before we had Alphabet going up like a rocket, today we've got Facebook or Metaverse going sinking like lead. So S&P 500 is down 38, just under 1%. The FTSE is unchanged at 75.92. To the currencies, fiat currencies, Forex report, sterling is down 0.2%, 135.53. We've seen sterling rally a bit in the last few weeks. I think it's on the run up to this rate hike, and we could see maybe a correction lower. It's the old adage of buy the rumor, sell the fact. But right now, yeah, 135.50, down about 0.2. The euro is down 0.1%, just below 113. The dollar is up 0.2% versus the yen at 114.68. Dollar's up 0.2 versus the yuan as well, 636.73. Aussie dollar is down 0.2%, 71.22. The dollar is up 0.25% at 126.97 versus the Canadian dollar. And the Kiwi dollar is unchanged at 66.32. To the general commodities, WTI crude down 0.5%, 86.94. High-grade copper is down half as well, 0.5%, 447. And natural gas yesterday, I think, was up like 10. And we've gone back above the 5 level, which historically is a key level. Right now, though, we're down just under 4%, that volatility again. And we're at 516. To finish off, we'll quickly look at the 10-year yield. That's unchanged and at 1.77%. So if you enjoyed this video, make sure you hit the like button. Make sure you shared this video far and wide as well. Make sure you also hit the little notification bell to be notified of all my new videos. And think about subscribing to the channel as well if you haven't. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.